Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Welcome back to the Massive Passive Cash Flow podcast. I'm Gary Wilson, your host. We're so glad to have you back listening to the show. We have an excellent guest today, Arn Cenedella, and I'll let him tell his story, but he's down in beautiful Greenville, South Carolina, or South Kakalaki for all you local folks down there. North Kakalaki, South Kakalaki. Only locals know what that means, but he got there by way of the Bay Area. So first off, Arn, I just want to say thank you, man. I really appreciate you taking your valuable time to share your knowledge with all of us.
Gary, I'm appreciative of the opportunity to talk with you and your listeners, and hopefully together we can provide some good information for them that will further their investing career, lead to profitable investments for themselves.
You got it. Well, I'll tell you, I'm going to take you back down memory lane. We've had some interesting conversations, and I really enjoy reading your bio. Take us back to like with you and your dad, and then step us forward, because I want people to hear this. I want people to hear what it was like in the Bay Area. And then when you get to Greenville, we'll start to put things in context. And this is going to, everybody listening, this is one you want to take notes, okay? If you're driving, I know you can't take notes. Just listen later again. You can go to the show notes and things like that. But Arn, go ahead and take her away, man. Take us down memory lane, you know?
Yeah, so I grew up in the San Francisco Bay Area. And like a lot of kids, middle-class Americans, we were taught, work hard at school, go to college, get a degree. And that's kind of what I did. And after I got out of grad school, I wanted to return to the San Francisco Bay Area. And I went to work with my dad in his residential brokerage business. He had an office in Menlo Park, California, which is basically between San Francisco and San Jose, next to Palo Alto, where Stanford is, and went to work as a residential broker. Had the good fortune of working in probably the best real estate market in the world. When I started in the business, Libby Canned Food Company was the biggest employer in Santa Clara Valley. And of course, now we know it's Silicon Valley, kind of the tech capital of the world. And had the good fortune to sell real estate there for about 35 years. My dad was a great mentor towards me, both in the brokerage and in the investing business. And he was a single family investor. So he just started accumulating single family homes. And what he told me was, Arn, the brokerage business will be a great source of income, but the real key is use that income to create capital that you then invest in real estate, because ultimately it's going to be the investment in real estate that creates financial security, financial freedom, and ultimately a level of wealth. So use the brokerage to create the income, use the income to create capital to invest in real estate. And that's basically what I did. And of course, back in the 70s and 80s, I got into the business 1978. You could still actually buy homes in the San Francisco Bay Area that made sense as rentals. So I started investing locally in my hometown. Also moved to Austin, Texas, and started investing there in the early 2000s. And I think we all know what's happened to Austin real estate. So I was a big investor, worked with many investors as clients, and kind of, no matter the price, no matter the market, you can still make good investments. You just have to do it properly, which for me, the way my dad taught me, was long-term fixed rate debt, low leverage, have ample cash reserves. And if you do that, you set yourself up for long-term success. You don't need to time the market. I think all of us understand the general trajectory of real estate values is up. And in my experience, 40 years in the industry, I typically have seen 6, 7 years of some growth, appreciation. Then maybe we have a year or two with a little turbulence, a slight downturn. Then maybe a year or two of level, a plateau. And as all the plateau does is set the floor for the next run up. And I've been through these cycles 3 or 4 times, like I'm sure Gary has. So that's how I kind of do it. I don't have to be a genius. I don't have to time the market. I just buy good properties in good markets, run them professionally, and it's led to, a good investment life and a good overall life for me. So take it away from there, and then I'll tell you the next stage. Yeah.
There you go. Well, what's interesting, I'm listening to it, I'm thinking, gee, I'm gonna follow Arn wherever he goes, because wherever Arn Cenedella goes, the market takes off. And
Yeah.
that's awesome. And
Yeah.
you picked some great ones. And for everybody listening, I just want to emphasize something here. 3 completely different markets, right? All who've gone through, the Bay Area, Austin, Greenville, South Carolina, have all gone through major growth spurts. And I personally am familiar with Greenville, South Carolina, because my mother and father's family are from there. I mean, I've lived there when I was a kid, and we're going to be there this summer for a big family reunion. But in the San Francisco area, we've got family out there. But here's what I point out here. I know you're probably thinking, if you're listening, gee, I can afford Greenville, South Carolina, but Gary, I can't afford San Jose, California. I understand where that's coming from, but I just want you to know that everything is relative. So if I flip a house in Greenville, South Carolina, I might make $100,000. I might buy it for 350, put 50 into it, and sell it for 5 or something like that. And just don't quote me on these. I'm just giving you some rough figures here. In the Bay Area, yeah, I've got to probably spend $1 million. Well, you know what? If I fix that thing up, it's not beyond reason to be able to sell it for $2 million. Okay. So everything is relative, and money follows management. So you don't have to have $1 million. You just have to have the project, and people will back you up. Okay. And Arn and I will talk about that here too in a little bit. So Arn, take us back to South Carolina. And I love Greenville so much because I again, I lived there as a kid. I grew up and took my mom to her 60th high school reunion 8 years ago at Greenville High, and I know the restaurants. I can tell you where to get the best tadpoles in the creeks, But it's just grown so much. And tell us what it is you're doing there now, not just for yourself but for others. How can others get involved? And take us down that path a little bit, if you don't mind.
Yes. Great question. And most of my career was spent in single family real estate, long-term buy and hold rentals. When I moved to Greenville here 10 years ago, I kind of continued that. I also did some fix and flips, so I have some experience there. And fix and flipping is a great way to rapidly increase the amount of capital you have to invest. But fundamentally, I'm a long-term buy and hold investor. About 5 years ago, I decided to transition from single family investing to multifamily investing. Had a wealth of experience, might as well do bigger deals. The potential for profit and cash flow is larger. So now I'm basically a multifamily syndicator. And what that means is I work with investors and we pool the investors' capital together to buy $3, $4, $5 million apartment buildings, which we then hold and operate. The great thing for the investor, these are passive investments where they contribute the capital to the deal, but my partner Brian and I kind of handle the day-to-day operation, dealing with the tenants, the stopped up toilets, and manage the day-to-day operation. And our investors receive quarterly distributions and a share of the profit at the end. So I moved into the multifamily space, syndication, working with investors. And you don't need to be a millionaire to invest in our deals, typically spark deals. Most of the investors average investments 25 to 50,000. So we help average ordinary Americans invest in real estate, reap the benefits of real estate investment without them having to spend a lot of time. They're busy with family, they're busy working. And so we help people invest capital in real estate, take the operational load off of them, and give them returns by doing it.
Did you know that you can participate in class every Monday? We call it Monday Night Live, 7 p.m. Eastern, with me and dozens of other investor agents from around the country, in fact, the world. Every Monday, totally free. No selling, no recruiting, just straight up education on anything and everything in real estate. And we have a lot of good guests coming on once or twice a month, bringing in expertise on subjects like how to buy a house with crypto. Okay. How about them apples? What about AI? How's AI affecting our business? How about the metaverse, blockchain processing? We're already using it in title work. So come on to Monday Night Live. Be ready to take notes and ask questions because it's live and engaging, and you get to participate by asking questions and meeting others. So we'll see you there. Go to realestateWithGaryWilson.com, click on the resource tab, drop down, and you'll see Monday Night Live. And in there, you can see one of the most recent classes. But more importantly, you can register for class as many as you want going up to like the end of the year, I believe. So in any case, do that. We'll see you on Monday Night Live. Look forward to meeting you in person. Take care. Okay. Let's go ahead and let's unpack this one a little bit because we're getting exciting now. So people can invest with you passively by providing the underlying funds, the actual source funds for acquisition, and I'm guessing maybe some remodeling too, or what does it actually look like? It contractually, is it an LLC? I'm sure there's some kind of a contract. If you don't mind, as much as you're able to share some of that,
Yeah, sure. So great question. So with the syndications, we form LLCs for each property we buy. So each property is owned by an LLC. The investors actually own shares in the LLC, and my partner Brian and I are designated as the manager of the LLC that owns the property. So people are investing and buying shares in the LLC. They have a percentage ownership of the entire deal. The one nice thing about it is my partner Brian and I, we sign on the loan, we take out the debt, we're the ones who are personally liable for repayment of the debt. So as an investor in one of our syndication deals, the investor doesn't have any liability to the lender. So it's a limited liability type operation. And we focus on Greenville County. It's where we both live. It's a market we know. And I know as a longtime real estate guy, you understand local market knowledge is really the investor's competitive advantage. So we stick close to home within Greenville County or the upstate South Carolina, which is about 1 million people. And within this market, we will buy value add properties where we go in and spend $10,000, $15,000 a unit, upgrading the unit and increasing rent. And what we've been working on recently is actually new build to rent products. So build to rent is kind of a new phenomenon in the American real estate scene where entire communities, 30, 40, 50 homes or townhomes are built specifically with the intent to rent them. So we've now, next week, we're closing 2 new build to rent products, one in Taylor, South Carolina, which is just above Greenville, and one in Easley, South Carolina, which is on the way to Anderson and Clemson, which you're well familiar with. So we'll do the gamut from value add, let's call them fixer-upper apartment buildings, to new construction. And for us, the numbers, the return metrics have to make sense. And so when we find a deal in our market that makes sense financially for our investors, we go ahead and buy it.
Excellent. Okay. Now for these, the ones that buy new construction for the purpose of keeping renting, are you also providing the management, like the property management, or is that being outsourced to third parties? Or
Yeah, another great question. So my partner Brian has a property management business here in Greenville. He manages maybe about 500 single family homes in the greater Greenville market. So we manage the multifamily assets, the apartment buildings directly. So it's an integrated business model where we are the general partner, we're the manager, and we're also the property manager. So we take care of all aspects of the operation of the property, and it works very well when the property manager is part owner of the property, as opposed to farming it out to a third-party property manager. And
yeah,
at the end of the day, it's the skill of the property manager. Nothing against third-party property management. And if you have a single-family rental portfolio, you're going to probably have a third-party property manager, which is okay. It's the skill of the individual property manager that really matters in making these investments run. Yep.
Oh my gosh, I couldn't agree with you more. I built a portfolio early on. Well, now it seems like it was early on, but I ended up building my own property management company, because I did try the third party vendors, and just like any walk of life, there's good ones and bad ones and everywhere in between. And I thought, I think I can do a good job. I was pretty good at, building things, building businesses and organizing, structuring and all of that. And then turning them over. So that's what we did. But the new construction part here, here's what I like about this. I'm about 6 years ago, I was one of the keynote speakers for RIA, Real Estate Investors of America. It was the annual cruise. And I met a guy there at dinner one night in Alabama, and his entire model was building new construction homes, renting them out to the best tenants for top dollar, because you got a brand new home. He can easily attract the best tenants and rent it for top dollar. And he had a 10-year warranty on the home. So for 10 years, all the major stuff's covered. And in 10 years, what did he do? He sold it. And he would do for sale by owner, and he could do like a subject to, or if he could get an assumption, somebody could assume his loan. He could, all kinds of things he could do. So he built in an annuity out of that. And that was his whole model. The guy didn't have a care in the world, you know. And to hear that you're doing this in Greenville, I mean, I'm fascinated, and I'm extremely pleased to hear that. So for everybody listening, when I get excited like this, it's for a good reason. This is a good strategy. Okay. Imagine if you could own a rental that's brand spanking new, and you got it covered from footing to rooftop for 10 years. you know, it doesn't get any better than that, guys. So in any case, well, let's continue on here. Now, as far as well, new construction, I guess that's pretty easy to. I was going to ask you, how do you locate the properties? How do you source them? But new construction, that's going to be probably easy, because you just look for who's building and work with the builder, and you know the prototypes. But for resales that you buy, are you getting them on market and off market, or what's your sourcing strategy there? If you don't mind.
Yeah, no, happy to share. And it's all of the above, right? As an investor, you try to pursue all avenues to find opportunities. So I bought apartment buildings that are off market. that maybe brokers bring me because they know I'm active in this market and they know the type property I like to buy. Uh, I also have bought in properties on market. I'm fairly active on social media within the local community with the real estate focus. Uh, the new build project that we're going to close next week, 13 duplexes and Taylor's, 26 units total. That I actually met the contractor on Facebook and we developed a relationship. And one day he posted, said, I've got this new project being built in Taylor's. Anybody want to buy it? And I went, heck yes, Merle, I want to buy it. And sure enough, within about a week, we were in contract. I also have a young associate that calls sellers direct. I provide him the property list. I know you've done this before too. You get the property list from Reonomy or a list source from the county assessor, and he's not afraid to get people on the phone and call. So we do some direct to seller marketing. So we pursue several avenues because, as you know, in a desirable market, in a competitive market, there are plenty of investors looking, and there's plenty of capital looking to get into these areas. So I pursue all different avenues to get it. I've also bought some apartment buildings from wholesalers. And wholesaling is maybe more familiar in the single family space, but I actually bought a 12-unit building in Spartanburg from a wholesaler and I'm very happy with it. He made some money on the wholesale fee. And that's the other thing. In real estate, there's enough for everybody. And so, it's okay for the other party to make a profit as long as you're setting yourself up to make a profit. So I try not to get too greedy. Like to buy good properties. I think the other thing we kind of discussed was, do I try to time the market? No. I just like to buy good properties in good locations, structure the acquisition properly, because long term, I know the value will go up. So that's kind of been my approach.
Yeah. Well, and I agree. I know, we in prior conversations, I've had people tell me in the past, it's uncertainty. Let's face it, we've had a few years of some rapid price increases, followed by a few years of interest rate increases, and pretty dramatically too. So a lot of people are thinking, man, I want to buy, but I can't afford what I've wanted to buy 3 years ago. And so I'm just going to wait. And then the sellers are like, well, we don't know what to do because what are we going to go? What are we going to buy? I got a 3% loan now. I'm going to have a 7% loan. So all these factors, but unfortunately, the wait and see approach almost always fails, because real estate is a very stable commodity. I know in the last recession, real estate went down in a lot of areas of the country, but that's very rare. Most cases, real estate just stops going up. It just stays flat for a spell. And I think that's what's going to happen here because we have so much pent up demand and it's starting to loosen up around the country. We can see it, our inventory on my team alone. I think we've got 38 active listings just as of today, So and things are starting to normalize, but the key is to not wait and buy, but rather buy and wait. And everybody here listening, I know you know what I'm talking about because if you've owned a house for 30 years or more, you've been through at least two market cycles. And think about what the house cost you when you bought it, and think about what the house is worth now. And just ask yourself, oh my gosh, yeah, it might have gone down between 2008 and 2011, but holy mackerel, the thing went way up after that. That's because it's a solid, stable brick and mortar. It's a tangible asset as opposed to a piece of paper giving you a share of a company. I'm not knocking the stock market. I invest too, and I have, in the stock market. I get it, but I have no control in the stock market. I have two options. I can get in and get out. Or a third option is do the trading where you can, let's face it, 1 out of 1,000 traders succeeds. Okay. So here in real estate, You can make a mistake buying a house, and I guarantee you, eventually, you're still going to make money. You know, it's a very forgiving commodity. You can fix it up, you can modify it, you can change tenants, you can sell it, you can refinance, you can do all kinds of things. So, but what I really want to focus on is, or go back to a little bit, Arn, is you mentioned you're settled on Greenville right now because it's got plenty of opportunities for you. And what's interesting, and people are going to probably call me up and say, please stop telling people about South Carolina, especially because everybody knows about Tennessee now. It's just all over the place. You branch in Tennessee. I mean, look at like Gatlinburg and Pigeon Forge. When we were kids, we only heard about them on Hee Haw, and now those houses are $500,000. Well, South Carolina is just one of those rare gems where North Carolina has grown dramatically, Tennessee, Georgia, you name it. And South Carolina has grown, but it hasn't gotten the press that the other surrounding states have. And I think it's just a matter of time. So anybody that's got their sights set on, settling down in a beautiful place to live, it's very, I mean, my gosh, you've got upstate, you're close to the mountains. I used to go to summer camp at Camp Greenville, literally half hour, maybe an hour from Greenville.
Yep.
In the mountains, just beautiful, Blue Ridge Mountains. And I'm, 3.5 hours from some of the most famous beaches on the planet, Hilton Head, Charleston, and Myrtle Beach, not to mention Isle of Palms and those others. And then in the middle is a lot of land, okay? And not to mention Columbia, South Carolina. So I-95 running right between the coast and Columbia. I've got 26 going from the coast up to upstate.
Yes.
My gosh, I couldn't think of a better place to be. And in January, when everybody up in north is wearing coats and shoveling snow and freezing, you could just put on a jacket and go out in January. It'll be 50 something degrees and you could play golf,
Yeah.
and you don't have to spend all the money like you spend in Florida. Well, I love you, Florida. I'm a Florida resident, but I'm telling you right now, South Carolina, I'm going to wager. I'm going to put my neck on the line here, Arn. I'm going to predict that South Carolina is going to be the last place in the U.S. where you can really still get a nice chunk of land for a fair price. Alabama's going like crazy. I mean, there's not much left. So now everybody can throw darts at me because I just let the cat out of the bag. But I know we're getting close on time here, but I wanted to ask you, what would you say drives you? Like, I know we all want to make a living, but I'm sure you learned like I did. The money simply becomes a measurement of how well you've done, achieving your goals. But what brings you that fulfillment? What's like the driving force? Because you got it. I can see it in your face. And if you want to follow up with that with words of wisdom, maybe from your dad, maybe something you created on your own to leave people with, and then I'll take it from there after that.
Yeah, well, sure. So, yeah, great question. So, I believe in real estate. Investing in real estate has created a pretty nice life for me. So, what motivates me is to help other people invest in real estate. And most people understand the value of real estate, but either they don't have the time to kind of do it properly, or maybe they feel they have a little lack of knowledge. So to be able to help people invest in real estate and get the benefit of it, that kind of drives me. The other thing with the multifamily is it's generally a team aspect. So most multifamily investment groups, it's a team of 3, 4, 5 people, and they all have different skill sets. So I really enjoy the partnership. I love working with my partners. We're friends, but we're also business people and business women. So I like the partnership aspect of it. So that's kind of what drives me. And the truth is, I enjoy what I do. I love hunting for deals and trying to find good opportunities. The other thing is, as we improve these properties, we're also providing some benefit to the community as a whole and also the people who live there. So when we improve properties, renovate these units, make them nicer places to live, we are doing something good. And I always tell people, uh, yes, you want to make a good investment, but you can also do good business by doing the right thing and taking care of people. So I think in real estate, there's a connection to the community that I really like. And then I think the only thing I would say is real estate, take a little longer term perspective. And if you take a long term perspective, you're not as subject to the 24/7 news cycle, which likes
Right.
to kind of preach doom and gloom. So take a long term perspective. It's not get rich quick, but it's a pretty sure way to uh, increase your net
Yeah.
worth, increase your income, increase your financial security. So that's kind of how I approach it.
Yeah. Well, I appreciate that. And I know I learned over the years. I mean, I mentioned it before. I've had properties where I had surprises. I technically you could say I made a mistake, but I get a property, open up a wall to put in a new pipe and find I got to do new wiring. And it happens to everybody. But the thing is it's so forgiving because every improvement you make adds value, not just on paper, like the actual value of the property, but increased rents. You know,
Yes.
the neighbors love it. It just overall, it's one of the most certain things. And if you just simply learn from people like Arn, okay, learn from Arn, stick with the fundamentals, right? It's like a mathematical certainty you're going to make money. And you can't say that about any other type of commodity. I'm sorry, to that level and that degree of certainty, you just can't. I've done it all, and just plenty of books about this stuff. But in any case, I want to ask you, is it okay if people reach out to you? I mean, some people might be interested in just participating in one of the syndication deals. Some of them might want to simply just pick your brain about Greenville. I mean, is it okay to share with them your
Yes. Yes,
okay?
please do. Love that. Yes. Happy to talk about Greenville. Happy to talk about real estate. And yes, if you'd like to invest with us, that's great too.
And the website is Invest with Spark, SPARK, investwithspark.com.
Correct.
Okay,
Yes.
good. And I have to ask you, the word spark, is there some special meaning behind that? Like something from the past
Yeah.
or
So what it is simplify for the
Mhm.
S, simplify investing. P is preserve capital. So uh, my approach on investing is preserving the safety of my capital and my investors' capital is number one. Yes, you want to make a return on it, but more than anything else, you want to preserve the capital. So simplify, preserve. A is for accelerate, kind of talking about accelerating your financial growth and security. R is about reaping the benefits of real estate investing, and the K is knowledge. So, folks like us, we do podcasts. I appear on guests' podcasts. We're just trying to educate people, give them some additional tools and knowledge. They can do what they want with it, but the knowledge is the first step. You want to be a knowledgeable investor, which means you need to get some education. So that's how the
Yep.
spark kind of developed. And I also kind of like the visual of an ignition, kind of lighting a fire, getting people moving forward,
Yeah.
creating wealth for themselves. So that's how it all kind of came together.
Well, I love that. I'm glad I asked the question because I actually
It's a
didn't know.
great one. No one's ever asked me that. So
I know it
bravo
just
to
it wasn't.
you.
Yeah, and it wasn't even a prepared. I'm sitting there thinking, I bet there's something there. My intuition paid off because it has meaning, but it also has additional value because spark means a lot of different things that are all positive.
Yes,
So, in any case, well, this has been a great show. I know we went over a little bit, but I mean, it's just packed with information, Arn, and I can't thank you enough for sharing like you did. And I thank you for listeners for listening. If you're watching it on YouTube, thanks for doing that. Make sure you go check out investwithspark.com. And on there, I'm sure there's contact information for
correct.
for Arn and just ask questions. You can't go wrong with asking questions. Arn said it. It's our team motto, it's the formula, Arn, we have. It's education, the right education, number one, plus the right information, number 2, plus the right action, number 3, equals the right results, number 4. And that's the real secret to success. It's fundamental, doesn't change no matter what walk of life you're in real estate, particularly. We've made, literally millions and millions of dollars by following that simple formula and just hanging around people like Arns to help us make sure we're staying in our lane and not taking unnecessary risk and things like that. It's just network with people, belong to organizations, associations, and you'll meet people like Arn. So, in any case, I wanted to thank you all. Oh, please, listeners, leave a review. All right, your review is our currency. You don't have to pay us for this. We're glad to do it, but your review is what allows us to keep going. And we're doing really well. Believe me, we're downloaded in almost 50 countries now, but we
Wow.
just barely hit the tip of the iceberg. We can tell based on our numbers. So you're part of something really tremendous, and I appreciate you listening and leaving that review. So Arn, God bless you, listener, and your families, and we will see you on the next Massive Passive Cash Flow podcast.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.